हेलो एवरीवन, वेलकम टू स्टडी आई क्यू। इस वीडियो के अंदर इन दिस वीडियो आई विल ब्रिंग टू यू बैंकिंग अवेयरनेस फॉर नवंबर मंथ बट also for the first 7 days of December. And the reason why first 7 days of December are important is not because specifically for exams, but because there was a RBI monetary policy on 6th of December, and that is why first 7 days of December are important. Now I was not supposed to bring this video to you because I was on a winter break, but I cut my winter break short because there were like umpteen requests from you to bring this video. So I took special effort to bring this video to you. This is my last video before going again on winter break, and I hope this video helps you in various exams. I wanted to bring this video before 8th because on 8th some people had NABARD exam, but I think I had covered most of the questions in my current affair videos. So this video will benefit people who are writing RRB mains exam on 11th. This will really benefit, and I can assure you minimum 6 questions will come in that exam from this very video. Also, since the level of the exams is just going up and up, so I tried to explain the topic conceptually rather than factually. I'm not here to give you facts but concepts, so that you have a good understanding. I remember in IBPS PO mains, one question came from hedging, and the hedging was not factual, it was conceptual. So therefore you can trust these videos, and you can trust especially for your GA section. Okay, so let's begin. First, and this I have just heard like maybe 3 days back. So India is doing very well in terms of FDI. India's FDI has crossed a barrier of $300 billion. How much is $1 billion? It is 6,700 crore rupees. 6,700 crore rupees is called $1 billion in rupees, because the value of $1 is equal to 67 rupees. So if you take that, then it is this much. Otherwise, it may vary. So India has received a total of $300 billion in foreign direct investment between April 2000 and September 2016, which shows that people are trusting India as a destination. India is a global destination. And 33% of this FDI has come through Mauritius route. Why through Mauritius? Because we have a double taxation avoidance treaty with Mauritius. This small island nation, we have a double taxation avoidance agreement, and therefore to make use of that, people don't have to pay the taxes 2 times, one in their own country and one in India. That is why they come through Mauritius route. So 33% of FDI has come through Mauritius route. So out of 300 billion, almost 101.76 billion, that is almost 1/3, has come from Mauritius. That also you should know. And FDI also comes from Singapore, from US, UK, but 2 most important countries for us are Mauritius and Singapore. So keep that in mind. Now a conceptual thing. This Reserve Bank of India said on 6th of December, just 2 days back. So this might be a bad thing to follow for people who like the government or Modi, but please believe me that I'm completely neutral when it comes to videos. Yes, I'm a human being, I have my own political inclinations, but when it comes to explaining in videos, I always remain politically neutral. So it's not like I'm anti-establishment as some people claim to be, that I'm anti-Modi. It's not like that. But this news is such, and RBI has declared that, now listen carefully, okay, 14 lakh crore rupees was the value for rupees 500 and 1000 rupee notes. Okay, that means of all the 500 and 1000 rupee notes that are there in India in the entire system, that value combined is 14 lakh crore. So RBI said, the government said, not RBI, the government said that there is a lot of black money. So government were saying that from out of 14 lakh crore, people are depositing this money in the bank because they are no more in use now, demonetization. So we are expecting around, let's say, 3 to 4 lakh crore back. That means 10 to 11 lakh crore black money will be flushed out of the system. But what has happened is, look here, almost 12 lakh crore rupees. Look at this. That is 83% is back into the banks. That shows what? And the deadline is not clear. We have not reached the deadline also. So deadline is till the end of December. So let's say by that time 95% of the money is back into the system. That means only 5% was the money that was not deposited by the people into the banks. So let's say that 5% entirely was black money. Okay. So how much this demonetization drive, which claimed to flush out the black money from the system in the order of 50%, 60%, 70%, is only 5%. Another thing, The people who are standing in lines, they are mostly from the middle class and lower middle class, and of course the lower socioeconomic status, the low net worth individuals. So on one hand we say that, and this is a true report, 1% richest people in India own 50% of India's wealth. And this is well accepted in the public domain. It is well accepted by everyone. 1% richest people of India own 50% wealth of India. So how is this possible that 500 and 1000 total notes, 95% are owned by the low socioeconomic people or the middle class? And I'll tell you, this is possible. Yes, this is possible. How? Because the wealth which is there with the rich people is not in denomination of 500 and 1000. It is in properties, real estate, this nifty, maybe IPL, who knows. So it is not in movable assets, but it is there in terms of immovable assets, and therefore demonetization will not help in curbing black money. This is proven, and this is proven by this statement of RBI. So what will help in curbing black money? It is the Benami transaction bill, Benami properties bill. The properties which do not have a legal owner and they should be confiscated. That will curb the money. But one thing the government has done which is not good is that they have said that if you voluntarily disclose your black money, you will be given a huge amount back. They have amended the bill. I'll explain in detail in the coming slides. What that will do is that it will encourage these black money holders to voluntarily disclose the money. But after 1st January, their entire money was as good as zero, because that was in 500 and 1000 denomination. Now what they will be able to do is that they will go to the banks and they will deposit the money and they will get a fraction of it back, and not just a small fraction. There are slabs ranging from 30% to 50%. So they will get a lot of money back, back. So this is, I have not understood this move, and this is basically to protect the big honchos, as simple as that. So anyways, this is what the RBI has said. 14 lakh crore was in the system, to almost 12 lakh, that is 83%, is back into the banks, and now only 2 lakh crore rupees in denomination of 500, 1000 is remaining, is still there with the people, and I'm sure that will also be back. Next, before I go into the next news, let me explain to you what is a, see, on credit card, let's say it is a Citibank credit card, okay? So Citibank, here is the bank which has issued the credit card. So it is called the credit card company, okay? Credit card company is what? Citibank. But what is the credit card network? It is MasterCard, okay? So MasterCard, Visa, American Express, and RuPay, these are all card networks, okay? So keep that in mind. If you see American Express card, the card network is also it is also American Express. So it's not necessary that the card company and card network have always be to be separate. They can be same, but in very rare cases it has happened, if at all it has happened. So bank is the credit card company which has issued the card, and MasterCard is the network on which they are working on. That is the difference which you should know. And now you will be able to understand the next news better. So what has RBI done? Now listen to this very, very carefully. See, 86% of the money, okay, is flushed out of the system because of demonetization. 86%. So what people are left with only is 14% worth of money. Okay, these are official government figures. So RBI wants the economy to become cashless. Not just the RBI, the government of India. Because Modi in his Man Ki Baat episode recently said that I want the economy of India to become cashless. So how will you pay? You will pay with your mobile wallet, your prepaid instruments, and Paytm and all these things. But the thing is, let's say some people, they find paying with credit card or debit card very inconvenient. Why inconvenient? Let's say you go to petrol pump and you tell the petrol pump guy that please fill the petrol for 1500 rupees in my car. Okay, so after filling the petrol pump, you will swipe your debit card on the machine which they have, which is called point of sales machine, and the machine will ask you for your PIN. Okay, that is 4-digit PIN of debit card will be asked by the machine. You will enter your 4-digit PIN, and only after its approval there will be a slip that will come out if your payment is approved, and the payment will be made. So this is a very cumbersome procedure for small payments. For example, if you want to buy some tea and eggs for yourself, now the tea and egg seller will say, okay, 100 rupee payment with your debit card. So you will again enter pin for small payments. It is inconvenient. So what the RBI has done is that you don't need to enter pin. That is, two-time verification is not required. What is the meaning of two-time verification? Now listen to this very carefully. See, first let me read up the news. So RBI has made it easy two-factor authentication for online card transaction up to 2000 rupees. And this will depend upon customer to customer. For example, while filling up the form, you can say that I want it, because some customers are that we want to, fill the pin because we feel more secure. As simple as that. We want it to continue. Whereas some customers will be like, oh, this is a hassle. I have to enter the pin and all that. So the customers can decide. It will be voluntary. It will not be forced upon the people. But RBI has given another option, which is for payments up to rupees 2000, for transactions up to rupees 2000, whether you do it with your credit card, you do it with your debit card, you do it with your any prepaid instrument, you don't need to have a two-step verification. That is, the second step verification was what? It was using the PIN. You don't need the PIN. As simple as that. So they have relaxed. And why they have relaxed? Because more and more people will find paying with prepaid instruments very easy. With the credit, debit, etc. It will be very easy with the prepaid instruments and also with credit and debit cards. So that is one thing which you have to know. But now the problem is, because the second verification which was using PIN, it will not be there. So there is a problem of security breach also. Okay, there is a problem of security breach. In that case, who will be responsible? It is the consumer or the bank. So it will be the bank. So RBI has said that banks will have to take full liability, full responsibility if there is any security problem because of doing away of second two-factor authentication. So keep that in mind. So what banks can do now? What banks can do? Banks can make their processes more secure. That is the only thing which they can do. Now another thing, it will not apply for transactions involving amount more than 2000. If you are paying 4000 rupees to petrol wala, you have to put a PIN. Okay, so two-factor authentication will apply 100%. It is mandatory for more than 2000, but less than 2000 it is voluntary. It is optional. So this move will help you to pay small bills, like if you book movie tickets, cab, some e-commerce companies, or even your local vendor, local these kirana stores. Next thing, and also at some places you have to use the OTP sent to your mobile phone, and that you have to enter to complete the purchase. So that is also very inconvenient. That is what? That is again a two-factor authentication. You are authenticating using OTP also. First you enter all the details of your credit card, and then you have to enter your OTP, if not the PIN in debit. So again, this will be discarded for payments up to 2000. And as I said, it is an opt-in service, which means that customers will have to specifically opt for it, okay, if they want to do it. Now, another thing, that the card network providers, which means MasterCard and all these, and the banks also, they will have to inform the customers about the availability of this service. Which means what? Which means that if you apply for a credit card, okay, or a debit card in a bank, and banks will have to tell you in advance that, look, this is the thing which we are offering. For up to 2000 rupees, you don't need to use PIN or OTP. But customers can take the call whether he wants to use this service or not. But the banks should explain everything to the customer. And the customers who opt for this service, let's say I say to the bank, okay, I want this service. I don't want PIN and OTP. So the customers will who want this service, they will have to go through a one-time registration process requiring entry of all the card details and additional factor authentication, etc. in the bank also, so that they don't have to do it again and again. So this is very similar to KYC. Okay. Next, this has happened before also, but Uber company in 2014, it was doing this without the permission of the RBI. That is, if you pay to Uber, you don't need a two-factor authentication, which was wrong because they did not take the permission of the RBI. So that time RBI gave warning to Uber and said that every transaction in the country should have a two-factor authentication. Okay. And in May last year, RBI had said that two-factor authentication was not compulsory for transactions up to 2000 through contactless cards only. Please note, in May 2015, I am right now talking in October 2016. Okay. Last year also RBI had said that, but it had given this option only for contactless cards. And please let me tell you what are contactless card. You take a POS, that is machine. You don't need to swipe your card, just bring it near to it, and using the NFC technology, that is near field communication technology, the data from the credit card or debit card will be entered into the machine automatically. And you don't need to use OTP, etc. anything. So that is a contactless card. And ICICI Bank was the first bank in India to issue contactless cards. Now, of course, there are a lot of banks which have dispersed contactless cards, but previously this was done by only RBI. Next, CERT. See, CERT is our cyber security agency which advises the government, the banks and organizations against cyber threats. Okay, so that is our premier cyber security agency, CERTIN. It has warned the micro ATMs. What are micro ATM? See, a micro ATM is not a ATM, okay? So don't consider that micro ATM is a small ATM, because micro means small. So it is not a micro automated teller machine in that sense. But what is micro ATM is this. This is a micro ATM. So it is very similar to your, the machine on which you swipe your credit and debit card. The only difference between an ATM and a micro ATM is that micro ATM is mobile. You can carry it in your pocket. I mean, by pocket I mean your bag. It will not come in pocket. But you can carry it in your bag and you can take it to a village through a person. And let's say I am a person from a village. I want to withdraw cash. There is no ATM, no bank in my village. How will I withdraw? Using micro ATM. What will happen is the person will come with this machine to me. Okay. And the person is the cash dispenser, not this machine. So the person has a bag in which he has 50,000 rupees. And I am a village person with a debit card. Let's say I have a RuPay debit card. So I want to withdraw money from my Jan Dhan account and I want to withdraw 20,000 rupees. Okay. Now this person will give me the money, not the machine. So this is a handheld device. Okay. Number one. But here the person is the source of money. He will verify everything and after that the person will hand over the money. So this is mobile. This is used in places where the banks are not there, and majority of the villages in India don't have banks. So how will this work? This machine, how will it communicate with the bank? So this is called core banking solution. That is, this machine will connect to the core banking solution using the GPRS, General Packet Radio Service. That is your 2G, 3G and this service, 4G, now 4G. It will connect with the core banking solution using the GPRS technology. That is called a micro ATM. But there are various threats that are there in the micro ATM which CERTIN has warned us. Okay, so micro ATM, they are point of sale terminal. They are very similar to point of sale terminal. What are the threats that are there? Threat is that skimming can take place. What is skimming? Your credit card and debit card data, it can be stolen. That is called skimming. So sometimes what happens is you swipe your card and just where you swipe, they fit in a hacking device. That hacking device takes all the credit card data and debit card data, and that can be misused. So these are some threats which CERTIN has warned us against. So what they have recommended? They have recommended that they have given certain guidelines how to make it more secure. Okay, so let me tell you some full forms they can ask. What is POT? What is POS? So that you should know. HHD, that is handheld devices, and ATM, automated teller machine. See, in exam these days, they are asking the full forms which are in news. Okay, so then NPCI is National Payments Corporation of India. Then these are the important full forms. CBS, they can ask core banking solution. So your micro ATM, they can be used for almost everything which a normal ATM can be used for, like account opening, ATM card transaction, eKYC, that is electronic know your customer norms, to verify your account, etc. Aadhaar enabled payment, Aadhaar linked payment, like you had for DBT, etc. direct benefit transfer schemes, cash withdrawal or deposit, fund transfer, mini statement, balance inquiry, and for n number of things others. You can use it for all of these purposes. Micro ATM is as good as a normal ATM. Next, so what are the recommendations by CERTIN? What should be done? So first, micro ATM security features must be upgraded. They have to be made more robust, more strong, updated. Then point-to-point encryption. What is point-to-point encryption? Point-to-point encryption is that the data that goes between two systems. Let me give you a live example. You use WhatsApp. Okay, so all the chat in WhatsApp is point-to-point encrypted. That is, let's say a person A is talking to his friend B using the P2PE. So, the third party cannot steal this data because the data will not flow in the form of data. It will be in the form of encrypted data from point A to point B. So it will not be easy to decrypt it. Okay, so that is the meaning of encryption. It makes the data more secure. So similarly, the data of your card has to be encrypted, and the encryption should be as maximum as possible so that there is no leakage of the data in the root. Which route? From the micro ATM to the core banking solution server. That is the route in which the data can get leaked. And micro ATM should not transmit any confidential data which is unencrypted. So everything should be encrypted or codified. Okay, and it must automatically log out the operator and lock itself after a period of inactivity, so that the data cannot be stolen by the person who is holding it, because ultimately you have to trust the person who is carrying the cash. He should not be able to do it. Next, then RBI has decided that it will introduce new 20 rupees notes and 50 rupees currency notes. Okay, so new 500 rupee notes are there, new 1000 rupee notes are there. That I have covered in the previous video. Okay, I told you new Gandhi series and magenta color and all that, you remember. But now there are new 20 rupees and new 50 rupees notes also. The difference is it is not demonetization. Why? Because the old notes will continue to be legal. Okay, but to prevent the prevent the shortage of 20 and 50 rupees notes in the system, RBI has issued new 20 and 50 rupees notes, and they will be in the denomination of 20 and 50 and Mahatma Gandhi series 2005. So there is no new series, it is the Mahatma Gandhi series 2005, and the old notes will be legal. Another thing very important, see, this is a note. Okay, now let me tell you what are the things that are there on the note. Signature is there, of course. Whose signature do we have on the notes? It is the governor of the RBI, Urjit Patel. Okay, Urjit Patel signature will be here. Okay, one more thing, RBI has the exclusive right of printing notes except 1 rupee notes. Okay, 1 rupee notes and 1 rupee coins are not published by the Reserve Bank of India. So if they are not published by the Reserve Bank of India, who will publish it? The Government of India. Therefore, Reserve Bank of India governor sign is not there on the 1 rupee note. So 1 rupee note is signed by the Secretary of the Ministry of Finance. Okay, also called the Finance Secretary. Who is he right now? Ashok Lavasa. Okay, Ashok Lavasa is the Finance Secretary or the Secretary in the Ministry of Finance. He signs the 1 rupee note. Previously, Mr. Ratan Vattal was there before Ashok Lavasa. Ashok Lavasa, I think in June or July, he was made as the Finance Secretary. Before that, Ratan Vattal was there. Now, 50 rupee note. Now, this is what you call the real deal. Okay, this is the serial number. Okay, this is what you call the inset letter. It is alphabet A, B, C, D, E, F, G, H, like that. Then you have a star symbol and you have an alphanumeric prefix. And if you remember, in the 500 and 1000 rupee notes that are new notes, this is in the increasing order. So this 0 will be small, this will be bigger, this will be bigger, 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 bigger. This letter will be this number will be the biggest for more security. Now 50 rupee note, that is the new note that will be published by the RBI. It will be without the inset letter in both the number panel. Okay, see, number is written on the note at two places. One is here, one is at the top right. Okay, one is at the bottom left, one is at the top right. So in both the number panel, inset letter will not be there. So this J, can you see? It will not be there in the new 50 rupee notes. Okay, and the 20 rupee notes will have the inset letter L in both the number panel. Okay, so 20 rupee note will have L instead of J. Okay, that is in this note. And both the notes will have the sign of Urjit Patel. But 1 rupee note, please note, 1 rupee note is not published by the Reserve Bank of India. And the year 2016, it will be printed on the reverse side of both the notes, so that they can monitor like on which year it was published. Next thing, Our Minister of State for Finance. Who is our Minister of State for Finance? I'm not talking about Finance Minister. I'm talking about Minister of State. What is the job of a Minister of State? See, our Finance Minister is Mr. Arun Jaitley. Okay. And our Minister of State is a minister who helps the finance minister. So in big ministries, like defense ministry, like home ministry, like finance ministry, which are big ministry, lot of work. So the prime minister has the right to appoint a minister of state. So minister of state who are helping Arun Jaitley to help in the finance matter are two, not one but two. One is Mr. Arjun Ram Meghwal and second is Mr. Santosh Gangwar. Okay, I repeat the name. They are our Minister of State for Finance. Arjun Ram Meghwal and Santosh Gangwar. Okay. Now, public banks, this was announced by Santosh Gangwar, and this is very, very important. See, if you ask me what is the biggest failure of the Modi government, it is that they are not able to revive the public sector banks. Okay, and the non-performing asset in the banks are just increasing and increasing and increasing. Now, to put the things in perspective, so there is a increase of 80,000 crore rupees in the non-performing assets in just 3 months. Okay, which 3 months? That is July, August and September. Okay, and you know that July, August and September is the second quadrant. So July, August and September, 80,000 crore rupee increase in non-performing assets in just 3 months. And so what is the total non-performing asset so far? It is more than 6 lakh crore rupees. Okay, and 6 lakh crore total, that is the non-performing assets. So there is an increase of almost 80,000 crore on quarter basis, and non-performing assets are maximum in the infrastructure, power, road, textile and steel. They are high in sectors like infrastructure, power, road, textile and steel. Now, to be fair to the government, I am not criticizing government. I am just saying that whatever the government has tried, it has not worked. Now, let me tell you what are the things government has tried. I will not go into detail because I have already explained these things n number of times in my previous videos. But these are the things which the government has done. This is from the government side, not from the RBI side. Okay. So the government has brought insolvency and bankruptcy code. This will also help you in your interviews. Okay. They can ask you what the government is doing for NPA. 2 questions are sure shot in your interview. Okay. I'm talking about IBPS PO mains guys, okay, who have got selected. One, they will ask about the demonetization, cashless thing and all these things, okay. One, they will also ask about non-performing assets. These are sure shot. So you can tell that government has tried to decrease the non-performing assets, although it has not been successful. So what have they tried? Now they have brought in insolvency and bankruptcy code. That is a bill they have brought in. They tried a scheme, Mission Indradhanush, okay. And Mission Indradhanush, in which they tried various things. They tried to infuse money into the bank. They tried to convert the loan into equity and all those things. Okay, I will not go into too much detail. They tried this act, which is called SARFAISI Act, which is securitization. Mug up this full form. It is important. Securitization and reconstruction of financial assets and enforcement of security interest act, which is called SARFAISI. Then they have tried RDDBFI, which is recovery of debt due to banks and financial institution, also called RDDBFI. Again, mug up this full form. And the government has also tried to establish 6 new debt recovery tribunals. So how many debt recovery tribunals they have established? 6. In short, DRT. What has the Reserve Bank of India tried to decrease the non-performing asset? So this is from the part of RBI, not from the government of India. So Reserve Bank of India has tried corporate debt restructuring. Okay, very, very important. And what is corporate debt restructuring? In that, the debt of the company is divided into 2 parts. Okay, one that can be resolved easily, one that is viable and one that is non-viable. So do check out my previous video if you want to know more about corporate debt restructuring. Then Reserve Bank of India also tried forming a joint lenders forum. Didn't work. Strategic debt restructuring. We are yet to see the effect of these two. And also the 4S scheme, that is sustainable structuring of stressed assets. I repeat, sustainable structuring of stressed assets. Now my question for you. Okay, I'm asking you this question. If you know the answer, write in comments. Which is the first company of India? Okay, which is the first company in India which has benefited from 4S scheme, which is availing the benefit of 4S scheme by the Reserve Bank of India, that is sustainable structuring of stressed assets. If you know the answer, write in comments. Don't use search engine, don't ask friends, be honest, write in comments. Next news, Akodara village in Sabarkantha district of Gujarat has become India's first digital village. Okay. Now please note that if you remember my last year GK, okay, I told you that ICICI Bank has started a digital village concept in India. Okay, digital village project. It started in 2015. That is, they will convert villages into digital villages, smart villages. So, Akodara village was adopted by the ICICI Bank. It was one of the villages which the ICICI Bank had adopted. And now look at the benefit. Akodara village is now cashless. So when demonetization happened, the people were not bothered. They were already using credit card, debit card, and all these mobile wallets. They were not bothered. So Akodara village is the first digital village in India, completely cashless, no cash. It's a small village in Gujarat, population of only just over 1,000, 250 houses only. Okay, so which is the first digital village in India? Akodara in Sabarkantha district in Gujarat. But there are some other cashless villages also, which they will ask in exam. So there is a village in Maharashtra. Okay, this village is 70 km from Thane and 140 km from Mumbai. The name of the village is Dhasai. 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 It is Maharashtra's first cashless village, not India's. If they ask India, Akodara. If they ask Maharashtra, Dhasai. Then 3 villages in Bihar. Okay, they will become cashless. And which bank is making them cashless? Bank of Baroda. Okay, Bank of Baroda. So there's a joke going on in certain circle that Bank of Baroda, it is making so many losses that it itself is cashless. So, but Bank of Baroda is making these 3 villages in Bihar cashless. These 3 villages are, one is the Bind Toli of Kurji, one is the Basti of Maner, and third is the Patsa village of Bihata. Okay, so I have not heard about these villages, even though I know about Bihar extensively, but not these 3. So just mug up the names. These 3 villages in Bihar will be made cashless by Bank of Baroda. Okay, and Dhasai I have already told you. Now there is a village in Telangana which is called Ibrahimpur village. It is in Siddipet district of Telangana. It is the first village in South India to become cashless. Okay, see, the first village in India to go cashless is Akodara. First village in Maharashtra to go cashless is Dhasai. First village in South India to go cashless is Ibrahimpur village in Telangana. Which district? Siddipet district. So please read the question carefully. Okay. Next, there is a village in Gurgaon. Sorry to say Gurugram. Okay, my hometown. The name of the village is Fazalpur Badli. Fazalpur Badli. It will be developed as a cashless village by the government of Haryana. That is BJP government under the leadership of Manohar Lal Khattar. He is making it a cashless village. So which village in Haryana will be a cashless village very soon? It is Fazalpur Badli. It is 27 km from Gurugram. Next, RBI has introduced incremental cash reserve ratio. But let me confirm to you that just yesterday RBI said that no need of this now. But still they introduced it at one point of time, so you should know it. Okay. Now what is incremental cash reserve ratio and what is cash reserve ratio? You go to, let's say, State Bank of India. Okay, you deposit 10,000 rupees. Okay, that is your deposit. And out of this 10,000 rupees, 4%. Okay, so you can calculate what will be 4%. It is 400 rupees. Okay, so 400 rupees State Bank of India has to give to the RBI. It has to keep with Reserve Bank of India. That is the cash reserve ratio. It is 4% since 2013. So for a long time, cash reserve ratio has been 4% from, since 2013. Now, cash reserve ratio applies to commercial banks only. It does not apply to regional rural banks, RRBs. It does not apply to NBFC, non-banking financial companies. It does not apply to mutual funds and it does not apply to insurance companies. So keep that in mind. Cash reserve ratio does not apply to RRB, NBFC, mutual fund or insurance company. Now, why the government said that there is a 100% increase in cash reserve ratio for a short time, for only 2 weeks, that is fortnight. See, fortnight means 2 weeks, okay? Because, see, everybody is depositing the money in the banks. So, the banks are full of cash. So, even if they give more money to RBI, they will not mind it too much because there is too much money. Also, there is a danger, banks have too much money. So, RBI needs to exercise its monetary policy. and increasing the cash reserve ratio is within its framework. So RBI wanted to get some money from the banks, that is use reverse repo, as simple as that. But another way of doing it is also increase the cash reserve ratio. So the banks will be forced to give the money to the RBI. Okay, so RBI said there is a 100% increase in cash reserve ratio, that is from 4% to 8% only for 2 weeks. That is called incremental cash reserve ratio. Okay, but just yesterday, day before yesterday, RBI said that in the monetary policy that incremental cash reserve ratio is not required. Okay, so why the incremental cash reserve ratio was done? To absorb the excess money, that is absorb surplus. Surplus means more than required liquidity that was there in the banks. Now let me come to the most important part, which is the Monetary Policy Committee. Just 2 days back, Urjit Patel had his second Monetary Policy Committee. It takes place once in 2 months. Okay, so when will be the next monetary policy? See, this I think it took place on 6th of December. So the next will be on 6th of February, as simple as that. Or 6th, 7th, 8th, I mean 1 or 2 days here and there, it's fine. So Monetary Policy Committee is once in 2 months. Now it was second monetary policy of Urjit Patel, the governor, and now the monetary policy is not dictated by the governor only, because there is a monetary policy committee, MPC. How many members are there in monetary policy committee? There are 6 members, 3 from the government, 3 from the Reserve Bank of India. Okay, so the 3 members from the government are very, very talented people, very knowledgeable, scholarly people like that, and 3 people from the RBI. I told you in the last video, one is always the director, then the deputy director. So you can check that video. Next. So what are the decisions that have been taken? So some are very, very surprising. So the first is that RBI has kept the repo rate unchanged. This is very, very surprising because after monetization, everybody was expecting them to cut the repo rate, but they said it is unchanged. And reverse repo is 5.75%. See, some people believe that reverse repo is 1% minus repo rate. See, it is not always like that. Okay, so don't have these false concepts in your mind. Reverse repo rate is not always 1% below the repo rate. Then cash reserve ratio, it is 4%. Okay, now there was a temporary hike in the CRR, 100% hike. Okay, but it was only for 2 weeks, and 10th of December it will no longer be in effect. Now, the RBI has cut the growth forecast. India's GDP will grow by 7.1% according to RBI this fiscal. What is the meaning of this fiscal? That means 2016 to 2017. That is called a fiscal. Which fiscal? 1st April 2016 to 31st March 2017. That is called a fiscal year. So, 7.12. Fiscal year is also called financial year. Okay, because in India, financial year starts from 1st April, not from 1st January. Okay, so RBI has cut. Previously, RBI had said that the India's GDP will grow by 7.6%. Even World Bank said so. But now RBI said that it will grow by only 7.1% because of demonetization. There will be slight decrease in the commercial activity for a foreseeable future, and that is why later on it will pick up. But in short term, there will be a slight loss. And inflation target is at 5% for March 2017 with upside risk. So this is important. Inflation target is 5% for March 2017. And RBI also said other things which are not important from exam point of view, but I will still explain it because a lot of people who are preparing for IAS also see my videos. So the Reserve Bank of India said demonetization will lower the prices of perishable goods and it could reduce the inflation by 10 to 15 basis points by December. So it was another reason why they did not cut the repo rate, because as soon as they cut the repo rate, what will happen? Growth will become high and inflation will also become high. Inflation is a byproduct of growth. And in fact, all the 6 members, to my surprise, were in favor of keeping the repo rate unchanged. So there was no clash of views this time. And RBI's monetary policy statement said demonetization will result in short-term disruptions, short-term inactivity, but later it will pick up. And then foreign exchange reserves, they rose to an all-time high of 364 billion. So that is where we are good. That is why our foreign exchange reserves are so high. So $364 billion. And RBI's next monetary policy is on 8th of February. So as I said, 2 months later, 8th February. Now, Airtel has launched India's first payments bank. Okay, it is in Rajasthan. So there will be payments bank opened all across Rajasthan by Airtel. Airtel is doing it not alone, but in association with Kotak Mahindra. Kotak Mahindra has almost 20% stake in the payment bank, and remaining 80% is Airtel. That is the Bharti Enterprises, Bharti Airtel. Okay, so payment bank, and I have explained payment bank. 11 banks had got the permission from the Reserve Bank of India to open the payments bank. 3 withdrew. Who withdrew? There was a Tech Mahindra, Cholamandalam, and there was that Dilip Sanghvi guy, Sun Pharma. They withdrew. So total 8 applicants are there, and Airtel is the India's first payment bank. Private, okay, not public sector. If they ask you an exam which is the first public sector, it is India Post Payment Bank. Next. So this Airtel payment bank, customers can open bank account by Aadhaar based eKYC, a very simple process. It's just a 5 minutes process. Then Airtel subscribers mobile number will be used as a bank account number. So your mobile number is now your bank account number, but the condition is the banks will accept deposits not exceeding rupees 1 lakh. You can't go and say I want to deposit 1 crore rupees in my payment bank. That is not the purpose why these payments banks were opened. Okay. Look at the interest rate. Interest rate is a very high 7.25% per annum. Okay, in your saving account. Right now, in my saving account in State Bank of India, I am getting only 4%, which is a very less. But they will get 7.25%. But the money cannot be more than 1 lakh. And another limitation of payment bank is they cannot give loans. They cannot lend money. Okay. Moving on. Now, NABARD, which is our agriculture bank for rural development. This RD stands for rural development. NABARD was established in 1982. And see, now 86% of the money is being swept away from the system. So farmers are left with no cash. And they want to sow wheat because it is Rabi season started. Where will they buy the seeds from? So the government has said, government has ordered NABARD to distribute 21,000 crore rupees to farmers so that they can at least buy their equipments and necessary seeds and other things, pesticides, etc. 21,000 crore rupees is the amount which government has told NABARD to disburse or distribute. This is probably the most important news. Paytm. Let's talk about Paytm. It is a prepaid instrument. First, let me tell you what is a prepaid instrument. As the name suggests, prepaid, its card. Have you heard about its card? You pay first, then you use it to make the payment. So it is a, it's a prepaid instrument. See, anything that you have already paid, you have cash in that, is a prepaid instrument. In fact, debit card also in some ways is a prepaid instrument, because in debit card you already have the full bank account cash in a debit card. So it is like a prepaid instrument. But the problem was that in a typical prepaid instrument, I'm not talking about debit card, in a typical prepaid instrument like Paytm, like its card and all these, there was a cap. The limit was 10,000 rupees. You can't have more than 10,000 rupees in your Paytm account, in your Paytm wallet. But now everybody is using Paytm. So the limit has to be increased. Now the limit is 20,000. This is the limit. So Paytm and MobiKwik and Chilled and all these, its cash, free charge and all these, they will be very happy because the RBI has doubled the limit. Now, let's say you want to have more than 20,000. Then what do you need to do? See, right now, anybody can download Paytm app on their mobile phone. They can transfer the money. Okay. You don't need to verify yourself. That is, no KYC is required. No KYC is required. Let's say you want to have more than 20,000 rupees. Then what do you need to do? You need to get it KYC verified. Okay. You need to approve. You need to call the Paytm guy at your home, or you need to visit a nearest Paytm center, and you need to show your Aadhaar card, passport and all these documents, and you will be verified. And after verification, you can have 1 lakh rupees in your Paytm. That is, 1 lakh is the limit if you are KYC verified, and 20,000 is the limit if you are not just a normal customer who is availing any prepaid instrument. Okay. So prepaid instruments you can use for your mobile charging, pay electricity bills, utility bills and all that. Okay. So previously the limit was 10,000 and now it is 20,000. Another thing very important which RBI has done. See, prepaid instruments, even merchants can use it. Okay. Even merchants can use it, but now merchants can also use it to transfer up to 50,000 rupees to their bank account. Okay. So merchants can use the prepaid instrument to transfer the money to their own bank account. And what is the limit for that? 50,000 rupees. Okay. So 50,000 rupees is what the merchants are permitted. They can use it, and this is per transaction. Okay. And these measures will be applicable only till December 30, 2016. That is 20,000 limit and 50,000. After that, RBI will take a call what to do next. Okay. So these are your prepaid instrument, PayPal and all these. Okay. Next. Now, prepaid instruments can be used as online wallet, mobile account, mobile wallet, smart card, magnetic stripes card, internet account like PayPal, paper voucher, and any such instrument which already cash is there. Now, what is the main advantage? Let's say I need to pay using debit card and I need to pay using Paytm. So tell me one advantage which Paytm has over debit card. Sorry. Tell me just one advantage. What is the advantage of a prepaid instrument? If I have a debit card, it is also a kind of prepaid instrument, although it does not fit in the classical definition of it, because I have money in debit card. Let's say I have 50,000 rupees in my bank. That means what? That means I have 50,000 rupees in my debit card. I can pay using debit card. Why do I need Paytm? Okay. See, the difference is that Paytm will have a certain limit. Okay. So out of that 50,000, you can just transfer 5,000 to your Paytm. You will feel more secure because now the maximum payment you can do is 5,000. That is the advantage of having a prepaid instrument like Paytm, that you can, whatever money you transfer, that becomes the limit. Okay, that becomes the limit. You cannot pay more than that. Whereas in a debit card, all the money in the bank account, let's say if it is 5 crore in your bank account, all that becomes vulnerable. So the security concerns are much higher. Okay. Next. Now let's come to a very, very important topic, Islamic banking. And I will explain to you what is Islamic banking, how do they function. See, in Islam, there are a lot of ethical issues. Okay. Islam gives a lot of emphasis on ethics, strong ethics. And this is very important. So in Islam, there is a rule which is money should not make more money. Okay, see, in our daily parlance, we say that, earning initial money is difficult. For example, if you have zero money, okay, and you make 1,000 rupees, so this is very difficult. But making 2,000 rupees from 1,000 rupees is not very difficult because money makes money. But in Islam, this is not given permission of. Okay, money should not make more money. Services should make more money. Okay, what is the difference? So, Islamic banking, first let me tell you about this. So the first Islamic bank is in Ahmedabad. It is opened in Gujarat in India. And it's a huge opportunity. India should embrace Islamic banking. It's very, very important. So Reserve Bank of India has proposed opening of a Islamic window. See, Reserve Bank of India has some hesitation, some concern, genuine concerns about Islamic banking in India. There are some security issues, there are some other issues, So they say that all the normal banks which are there right now in India, that is the conventional bank, they should have a Islamic window. Okay, and that should be Sharia compliant or interest free banking should be there later on. But first there should be Islamic window, so that we want to gradually introduce Islamic banking in India and not do it right away. So first step is to open an Islamic window in conventional banks. Now, what is a Sharia bank? What is a Islamic banking? See, in Islamic banking, interest will not be charged on the money. Now, you will immediately ask me a question. The only source of money for banks is interest. If they are not charging interest, how will they survive? See, after all, they will also have a lot of expenses. They will hire a lot of people. Their salary is the real estate salary, all those operational expenses, every day-to-day expenses, transaction cost and all. So where will they get the money? How will the Islamic bank survive if it is not charging interest? So for that, I will explain you very, very easily how they make money. Okay. So the concept of interest, it is prohibited under Islam. Now, Islamic banking, why am I saying this? It is needed in India. Our banks are already there because there is, we are not banked enough. Okay. As I said, out of 6 lakh villages in India, only 52,000 villages in India have banks or bank branches. So they are not connected to any bank. If Islamic banking comes in India, it will help in financial inclusion, because these Islamic banks will also prosper, they will also flourish, they will mushroom in the villages. So there will be financial inclusion of those sections of society that have remained excluded due to religious reasons. Now, under Islamic law, money must not be allowed to make more money. Instead, a bank must provide some service to earn more profits. And these are the three ways by which the bank can earn money. First is called, these are the principles of Islam, okay? First is called musharaka, which is profit and loss sharing. So this is an arrangement where you give the bank your capital and it seeks out projects for growth. This is like a mutual fund, you give your money to the company. Okay, company will also invest in the project, you will also invest in the project, but you don't have the knowledge, so you give your money to the company. Company has hired all the advanced people, all the people with knowledge, and they will invest in the project and the profit will be shared. That is profit and loss sharing. So it is just like a mutual fund. That is called musharaka. Then there is izara, which means rental. That means the bank purchases an asset and rents it to the other client. Okay, it is very similar to a lease agreement. That is how the banks make money, Islamic bank. And third is izara muntayya bitamalik, which means rental with eventual ownership. Okay, and I will explain it to you in very, very easy terms. So let's say I have bought a house for, let's say, 1 lakh rupees. Okay, yes, 1 lakh rupees I have bought a house for. Now I go to a Islamic bank, okay, and I tell the bank that I need loan. Okay, I need loan of 1 lakh rupees to own a house. So they will say, okay, take the money. Now there are two ways in which they can function. First is izara, or one is musharaka, or izara muntayya bitamalik, which means either they will tell me that are you ready to buy this house for 1,50,000, because 50,000 is the extra that you have to pay to the bank. Okay, so that is the pre-calculated profit. The bank has calculated the profit beforehand. That is 50,000 is the profit, or let's say 20,000 is the profit. Okay, so the bank will ask me, are you ready to buy this house for 1,20,000? We will finance it. Okay, so you said okay. That means you have already told the bank that you are ready to pay an amount of 20,000 extra. Okay, see, the difference is in the vocabulary, so to say, in some cases. Now you will say that this is an interest only, just the language is changed. Okay, instead of interest you are saying profit. So yes, it is like that in some cases, but there are other ways also. Okay, so this 20,000 you have decided to pay to the bank. So the bank will give you a loan of 1,20,000. Okay, it will give you a loan of 1 lakh, but you will be required to pay to the bank 1,20,000. This is the pre-calculated profit, and then they will be this money will be split up into your monthly installments. So 1,20,000 they will split into, let's say you want to pay it back in 2 years time. So they will split it accordingly. 1,20,000, it means you need to pay 60,000 per year. Okay, that means you need to pay 5,000 per month. So 5,000 per month you will pay for the next 2 years, and the house is yours. That is one way. Okay, another way, some banks, what they can do is they can have izara. What does it mean? See, 1 lakh rupee you need. Okay, you go to the bank, Islamic bank, and you tell that I need to buy the house. So they say, okay, take the money. So you have taken entire money, that is 1 lakh, and you have bought the house. Now the house is yours, but until you pay the installment, only then the house is yours. So right now, what is your ownership in the house? It is 100% money of the bank, right? 1 lakh is 100% money of the bank, so 100% ownership of the bank. That means your share is 0%. Now try to understand this. Right now, even though the bank has given you the money, but the house is owned by the bank, not you. Yes, bank will give it to you eventually, but right now it is not yours, it is bank's. Now let's say from that house, you give it on rent. So from that house, 10,000 rupees per year is the rent money. Okay, 10,000 per year, and 10,000 per year is the rent. That rent will be of bank. Okay, because 100% it is owned by the bank. Now after 1 year you come to the bank and you say that okay, I am giving you 50% back. After that, the next 10,000 will be split into two parts. 50% will be of the bank and 50% will be of you, because now the house is 50% owned by you and 50% owned by the bank. So 50% rent will be your earning, 50% will be bank's earning. But until and unless you pay to the bank back, you will lose the rent. That is how Islamic banks earn. That is called rental or rental with eventual ownership. That is, till the property is yours, all the money that that asset or property is earning because of rent or other things, that is banks. Okay, now let's say you have hired a you want the money to buy a farmhouse. So what will the bank do? Bank will give that farmhouse for rent, for marriages, for parties, for concerts and all these. Whatever the money is there, bank will earn, even though it is your property. That is how Islamic banks earn. Okay, so I will go into much deeper in my maybe a new video or a separate video, but you should understand what is Islamic banking. So what is the basic funda? As I said, money should not make more money, services should make more money. So Islamic bank make money through providing services. Okay, and in Islamic bank, high degree of uncertainty, also called gharar, is not allowed. Okay, risks have to be minimum, and that is why it is one of the most ethical bankings. Okay, next, so 22 public sector banks out of, see, total there are 27. Okay, but out of 22 public sector banks, 16 banks, they did not pay any dividend to the government. See, they don't have money. How will they pay the dividend to the government? And how much dividend a bank need to give to the government? So this is the guideline. Under the guidelines, RBI guidelines, profit making banks, they have to pay a minimum dividend of 20% of their equity or 20% of their post-tax profit, whichever is higher, to the government. This is the rule. I repeat, either they pay a minimum profit of 20% of their equity, because let me tell you, every bank, it is not like every bank is 100% owned by the government. Okay, yes, public sector banks, like some bank are 70% owned, some are 80%. It depends. Okay, so out of the equity means whatever is your ownership in the bank, 20% dividend they have to pay to the government, or 20% of their post-tax profit if they are a profit-making bank, whichever is higher. But out of 22 public sector banks, 16 banks did not pay a penny. Why? Because their NPAs have been accumulating consistently. So due to this, there is a 67% decline in the government receipts, or almost 1450 crore rupees decline, okay, in the earning of the government. And only 16 did not pay anything. Only 6 bank they declared dividends. Okay, and it is also at a lower rate than the fiscal which ended in March 2016. So the government is a little bit flexible, but is it like that these banks can continue to avoid the 20% rule forever? No, the banks have been given a deadline till March 2017, that is the end of this fiscal, to clean up their balance sheets. Okay, after that they will not be spared. Next, so there is a special task force which has been constituted by the government to recalibrate ATM. See, ATM, there is a place for keeping notes. Now you know that the size of the new 500 and 1000 rupee note is different to the old notes. So the place and ATM, they have to be, some management has to be required, some space modification has to be required. So, and also the ATMs which are out of cash, they have to be recalibrated, they have to be refilled. So there is a committee which is being made, that is called SS Mundra committee. They can ask you, SS Mundra committee has been constituted for what? It has been constituted to recalibrate the ATMs in the country, and SS Mundra is the deputy governor of the Reserve Bank of India. Next, now BRICS countries, they want to share the information so that tax evasion, money laundering, all these things can be stopped. So all the 5 BRICS countries, Brazil, Russia, India, China, South Africa, they will share the tax information. Okay, and this meeting was all of their head of revenues, they met in Mumbai recently, and this decision was taken. So all the 5 countries, they committed themselves to prevent the base erosion and shifting of profit, also called BEPS. BEPS. So that is one full form which they can ask in exam, BEPS, which is base erosion and shifting of profits. Also, they will automatically exchange the information. There is a framework which has been designed, which is called Automatic Exchange of Information, AEOI. Now let's talk about Amazon. Amazon had launched a launchpad in 2015, not in India, but now it is available in India also. Okay, and Amazon has done a tie-up. Amazon has tie-up with lot of organizations. One is DIPP, which is Department of Industrial Policy and Promotion. Then also with NASSCOM, also with the Niti Aayog, also with Government of Maharashtra, Telangana, etc. So Amazon has a tie-up with lot of government organizations. And this launch, what is this launchpad? It will allow the Indian new companies, that is startups, to sell their products to overseas people. Okay, if you have a product, if you have a good product, you can go to Amazon launchpad and you can sell it in the overseas market, thereby fetching more profit and increasing your market size. So Amazon launchpad was started in 2015. Okay, and it is in 7 regions and 400 products from different startups, including 25 Indian startups are there right now. This is not important, but it was launched in 2015 in the world. But in India, Amazon is a company from United States of America, and its founder is Jeff Bezos, who is in the top 5 richest people of the world. So Amazon. Next. Now, according to the World Investment Report 2016, it is released by UNCTAD. Global FDI flow has increased by 38% to $1.76 trillion. Okay, and it is the highest since the global risk crisis. Okay, so just before the global crisis in 2006-2007, the FDI was even higher than today, but since then this is the highest FDI, and it has increased by 38% to 1.76 trillion. Okay, India invests a lot of money in America, UK, etc. In fact, our highest FDI is in United States of America. So foreign direct investment has increased by 38% globally, and right now what is the value? 1.76 trillion. This is as per the World Investment Report by United Nations, UNCTAD. Next. Union government has introduced taxation law, second amendment bill 2016. This is very, very important. If you have black money, go and deposit in the bank, declare it. You will be fined a penalty. Previously there was a rule also, now also there is a rule. Now what is the rule? If you have black money, go to the bank, declare it, and so you are basically a tax defaulter. You are a black money holder. Okay, you will be charged a very high tax rate, and strict penalties will be put on you. Okay, if you are a normal person and you are depositing more than 2.5 lakh rupees, then 200% penalty will be put on it. If you have more than 2.5 lakh rupee, 200% penalty will be put on it. But if you are a black money holder, let me tell you lot of penalty, and let me tell you the slab, how much penalty. So first, this is mandatory for people who have black money. They will deposit 25% of amount. So if you have 1000 crore black money, 25% amount you have to disclose in Pradhan Mantri Garib Kalyan Yojana, which is PMGKY, for a 4-year lock-in period without interest. Okay, so that this money can be used by the government for furthering the interest of the poor. Okay, now if you choose to declare your money, you in 500 and 1000 rupee notes under the Pradhan Mantri Garib Jan Kalyan Yojana, then you have to pay a tax 30% of your undisclosed income, and 10% penalty will also be put on the undisclosed income, and there will be a surcharge also at the rate of 33% of the tax, that is 33% of 30%. Let me explain to you. See, 30% you will pay, that is the tax you have to pay, 30% on your undisclosed income. Apart from that, 10% penalty will be put, okay, on your undisclosed income, and apart from that, of this 30%, another 33% will be taken extra, which is a surcharge for Pradhan Mantri Garibi Kalyan Yojana. So this is the slab. In addition, you also have to deposit the black money holder also has to deposit 25% of undisclosed income in a scheme, which will be notified by the government in consultation with the Reserve Bank of India. Okay, so this 25% you also have to deposit in a government scheme. And if for those who continue to hold on to undisclosed cash, and if they are caught, then they will have flat 60% tax plus a surcharge of 25% of tax, that is 15%, which will total how much it has become. See, 60% you have to pay if you are caught, okay, and 25% of 60%, which is 15. So total tax how much you will pay? 75%. So you will be left with only 25%. Not only that, the assessing officer If he wants, he can put another 10% penalty in addition to the 75% tax. So you will be left with almost nothing. Okay. So let me quickly tell you, if you disclose your money, let me quickly revise it for you. You will pay number one, first 25% of the amount. If you disclose, if you are a good guy, you go to the bank, you will have to pay 25%. That is the amount which you have to put in Pradhan Mantri Garibi Kalyan Yojana for a 4-year period minimum, and you will be given no interest. Okay, so basically this is the money which you will get back, but you will not get it back with interest. Then if you have the money in 1500 currency notes, then you will have to pay 30% of the tax. Apart from that, you have to pay 10% penalty, and apart from that, you have to pay 33% of 30% extra. That is the Pradhan Mantri Garibi Kalyan Yojana tax. But if you don't disclose and if you are caught, then you will be in a bigger problem. So then you will be charged 60% tax, and you will be also charged 15% extra, that is 25% of the tax, so total 75% tax. And apart from that, if the assessing officer decides, you will also be placed a 10% penalty on. Also note that in the previously, if you disclose, then you also have to invest 25%. You have to deposit in a undisclosed your undisclosed income in a government scheme, which will be government will notify it to you in consultation with the Reserve Bank of India. So I hope this you have understood. Now the Insolvency and Bankruptcy Board of India, which is called IBPI. Please note that IBPI has 10 members, okay, and a chairman. So the chairman is who? Mr. MS Sahu. They will ask this, who is the chairman of Insolvency and Bankruptcy Board? It is MS Sahu. And Insolvency and Bankruptcy Board has been in news for a lot of reasons. Now their latest news is very, very important. They have set up two very high level advisory committee, and this is basically to gather the input from experts. Okay, two very, very important advisory committee. Let me tell you which are those committee. So the first committee is the Advisory Committee on Services, and this is headed by Mohandas Pai. You don't need to know other members. This is not required. You just need to know who is the chairman of or the president of this committee. It is Mohandas Pai. This is the Advisory Committee on Services. But they have also set up another committee which is on liquidation, insolvency. So there is an Advisory Committee on Liquidation, Corporate Insolvency and Liquidation. It will be headed by Uday Kotak, banker Uday Kotak. Extremely important. So there are two committees which have been set up by the Insolvency Board. One is the Advisory Committee on Services. It will be headed by Mohandas Pai, and an Advisory Committee on Insolvency and Liquidation, it will be headed by Uday Kotak. You don't need to know the other members. Okay. Now our central government has imposed the duty on steel products, and this is to protect our domestic industry. What happens, how this entire game operates, let me tell you. Let's say you are a Chinese company. Okay, you manufacture steel. Let's say you make a steel 100 rupees. I'm just giving arbitrary figures, okay, to explain you. So what is the cost of your steel per kg? 100 rupees. Okay, Indian company, what is the production of steel? Let's say it is 120 rupees, okay, per kg. Now Chinese company says that I want to sell my steel in India. So the government will put a export duty. Okay, government will put a export duty, and let's say that export duty is 30 rupees per kg. So the Chinese company will come to India and it will sell the steel at 130 rupees per kg. Okay, and the Indian steel is being sold at 120 rupees per kg. Okay, so Indian steel company can compete with the Chinese steel company in terms of money. Now what the game China plays, and this has been proven again and again, this has been proven by a lot of economic experts. What the Chinese company do, they don't put the export duty. Okay, now please listen carefully. Chinese government do not put the export duty on their product. They say we don't want to earn this 30 rupees. We are not interested in that. But we are interested in the long game, the bigger picture. What is that bigger picture? Now let's say this steel comes to India. So the Indian company is selling the steel 120 rupees per kg. Okay, Chinese company will sell the steel at 100 rupees per kg because no export duty has been put by the Chinese government on the company. Now can the Indian company compete with the Chinese company? No, because there is a significant difference in the price of 20 rupees, so the people will buy Chinese products more, and this earning which the company will get, then the Chinese government will come and it will charge interest on that earning. So Chinese government is earning anyway, if not by putting export duty, then by putting tax on the earning of the company. But it has also served another purpose, which is that it has flooded the Indian market with Chinese products, and that is what happens every time. You take any sector, you will find it is flooded with Chinese products. Why? Because the Chinese products are very cheap. And why they are able to become very cheap? They are able to become so cheap because their government does not put a export duty. So what can Indian government do? Indian government can put a import duty, as simple as that. What is that import duty? Okay, we are importing steel from China, but we are putting a 30% import duty. Now the price is again 130, so that our Indian companies don't go for a toss. Our Indian companies, they can survive the competition from China. To protect our domestic companies, this import duty has to be put on a lot of products. That is how this entire game operates. Now this is, I have told in very simple language to make you explain, so that you can follow the news for your further concept clearing. Okay. So our union government has imposed import duty on the steel. Okay, how much? So it will be 10% in the first year, then 8% by 2018, and 6% by 2019. They will gradually decrease it. Right now it will be 10% in the first year, and by 2018 it will be 8%, and by 2019 it will be 6%. This will be put on lot of steel products, not all the steel products, but it will be put on steel products like hot rolled flat sheets of steel and plates of steel, etc. Next, Securities and Exchange Board of India, it is a market regulator. Okay, it has eased the rule for angel investors, angel funds. What are angel funds? See, you need to know little concepts if you want to follow these news in your day-to-day life. Okay, otherwise these words will scare you. Let's say you are a new company, new startup. Let's say you are a talented engineer from IIT Mumbai. Okay, IIT Mumbai, you are a very talented engineer. You want to make a robot. You want to make a company which manufactures robots. Now, to manufacture robots, either you invest your own money, okay, in your startup, new company is called a startup. Okay, either you run the company with your own money. Let's say this IIT Mumbai engineer is from a wealthy family. He is from a rich family. So he will tell his dad, I want 5 crore rupees. His dad will give him that money. So that 5 crore rupee he will invest in the company. That is called bootstrap. When you run a business with your own money, that is called bootstrap. But he might very soon run out of this money, because there will be operational cost. He will have to hire office. He will have to hire a team. So how long will this money last? Very, very less. Okay, it will run out. He will run out of this money. So better is you hire an investor. You take an investor. You pitch your idea to an investor, and he will invest the money in your idea. Okay, so that is called angel investor. Now, if you want a lot of money, if you want, let's say 100 crore, then you don't go to angel investor. You go to a venture capitalist, because venture capitalists are the guys who have a lot of money. They invest in your ideas, in your company. But if you want little bit, like you want 1 crore, 2 crore, 3 crore, you go to angel investor, and the guy will invest in your company in exchange for some stake in the company. Okay, so you have made a company called ABC Robotics. So the angel investor will tell you, I am investing 5 crore rupees in your company, but in return, can you give me 10% of your company? So you say, okay, take 10% equity, 10% stake in my company, or 20%, depends, that depends. Okay, and you take the money. Now you are happy because you have somebody else's money to burn the money. Okay, and your risk is a little bit minimized. But then if the company does well, you have to share 20% profit with him, or whatever is the equity which you have agreed upon. So that is how this entire market operates. Now, angel investors, they invest in the companies, in even in public sector enterprises. So previously there were guidelines by the SEBI, but now the guidelines are relaxed. So what are the guidelines that are relaxed for angel investors? Let me tell you. And why they have relaxed these conditions for angel investor? Because there was a committee which was called Narayana Murthy, Narayana Murthy Alternative Investment Policy Advisory Committee, and this was recommendation of this committee that the rules and regulations should be relaxed. They should be made more flexible for angel investors. So what are the relaxation? Previously, okay, only 49 angel investors up to 49 could invest in a scheme, but now 200 angel investors can invest in one scheme. So the number has been increased from 49 to 200. Another thing, if the startup is 5-year-old, they can invest. Previously, it was only 3-year-old startup which they can invest in. Okay, so all the startups, so little bit old startups also they can invest in. 5-year-old startup they can invest. So it has been increased from 3 years to 5 years. Next, the minimum investment by an angel investor, okay, in any undertaking has been reduced to 25 lakh from 50 lakh. So angel investor previously had to invest minimum 50 lakh rupees. Now he can invest only 25 lakh rupees. Okay, and the lock-in requirement, that is angel investor previously had to invest a minimum amount of 50 lakh for a minimum 3-year time. The lock-in period, that is it cannot withdraw from the company earlier than 3 years, but now that has been reduced to 1 year. So after 1 year, the angel investor can withdraw the amount from a scheme, any undertaking. Okay, so these are the this is to attract the angel investors, from and they, so that they can invest a lot. So they will ask you the question with respect to what the rules are relaxed. It is regards to angel funds, angel investors. Then China has agreed to import. This is financial awareness, not banking awareness. So China has agreed to import rice from 17 mills in India. Okay, that is the all types of rice. There is a basmati, non-basmati rice from 17 registered mills in India, and these mills are in Punjab, Haryana, Uttar Pradesh, and Madhya Pradesh, and all this. Okay, so that is about rice. Now, report by Credit Suisse, very very important. Credit Suisse report says that India's wealth has increased, but disparity has also increased, which means what? Rich is growing richer and poor is becoming poorer. That is what is happening in India. It is very very clear. So India's wealth has risen because the wealthy has become wealthier and the poor has become poorer. That is what the report says, and I'll tell you what the report says. So this is what the report says. So the wealth in India is mostly dominated by property and real estate. And I told you that maximum wealth is in property and real estate. That is why the Benami Properties Bill will flush out money, black money, rather than demonetization. And it makes up 86% of its household assets. 86% of the assets of household in India are in property and real estate. So only the 14% is in remaining, that is the movable or other types of assets. Next, the wealth in India in local currency terms has increased 5.1% in 2016. Okay, but due to adverse currency exchange movement, then India's household wealth has decreased by 0.8%. I repeat, India's household wealth has decreased by 0.8%. Then the annual growth of wealth per adult has averaged 6% between 2000 and 2016. And the number of millionaires have remained flat. So 1.78 lakh millionaires are there in India. Total almost $1 trillion is the wealth which they own. Now the most important data is this: the global wealth as per Credit Suisse is increased by 1.4%. Total is $3.5 trillion, and now total is $256 trillion. That is the global wealth. And what is the increase? $3.5 trillion is the increase, which is 1.4%. And the number of millionaires in India is projected to increase by 9.5% in the next 5 years to 2.8 lakh. So the number of millionaires in India, who is a millionaire? Who has $1 million or 6.7 crore rupees. He is called a millionaire. So, and high net worth individual means rich people, the ultra high rich, they increase by 5.2%. You can see here, it gives a very clear story to 2260, including 1040 with more than $100 million. So that is the picture. Next, Pankaj Patel is the new, he's elected as the FICCI president. FICCI is what? Federation of Indian Chambers of Commerce and Industry. And who was previously the president of FICCI? It was Mr. Harshvardhan Neotia, and now it is Mr. Pankaj Patel. And Pankaj Patel presently was the managing director of Zydus Cadila, which is a pharmacy company based out of Gujarat. Next, SAIL. SAIL is the Steel Authority of India. It has won the Golden Peacock Award for corporate governance. Golden Peacock Award for corporate governance, which means all the stakeholders of the company are happy. For that, it is been given Golden Peacock Award. So I hope you learnt something from this video. I tried to explain in very fluid language. Now, sometimes what happens is when you explain in fluid language, there are, I am sometimes not politically correct, so to say. But my idea is just to infuse the concepts in your brain and you can follow up with your own. You are intelligent people. The only thing you lack is the motivation to study general awareness. So my job is to not only give you knowledge, but also to inspire you so that you can follow it up. Now, when you read any news, you know how to read the news and how to follow it up. So thanks for watching, and please share the video with your friends. This video will be available only in English language because in Hindi it's very difficult to explain these things. Thanks.